Euro-US dollar clings on the horizon. UK inflation lower than expected. Sterling shrugs.
U.S. CPI expected to keep rising in December as last mile of inflation proves stubborn.
Brazil orange juice exports volume falls 20% from July to December.
Death toll from South African mine siege rises to 78, rescued now at 166.
U.S. MBA mortgage applications WE 10 January 33.3% for August 3% prior. CPI today. Oh yeah, CPI, big deal. About 42 minutes from now. Oh, 40 minutes now if you look over here. Nice. We'll get going at the top of the hour as scheduled. I think I'll study in the background while we wait. Why waste 10 minutes, right? Why waste 10 minutes?
Welcome to Financial Reporting 1. You can think of it like a basic accounting class. If you've never taken accounting, I promise we won't get too in-depth. The test wants you to know the 3 types of financial reports that are most commonly used. The income statement, also called the profit and loss, the balance sheet, and the statement of cash flow. You're never going to have to prepare one of these reports, but you have to understand what goes into these reports. My advice to you for the financial reporting questions is don't make them harder than they are. For example, which financial report would you look at to find a company's income and expenses over time? What would you look at? You look at the income statement. The answer was right in the question. They often call it the profit and loss as well. Just to point out that at the end of the year, there may be a loss for the business. There isn't always a profit. So the income statement. Let's look at some of the parts of the income statement.
Gee whiz. It's like high school level.
Statement is for a period of time. Profit and loss, it's also called. So it's for let's say, the year 2000. It's going to have on it very basic revenue, This is also called gross sales. And it's going to have lots of different expenses. So revenue, money coming in, expenses, things that have been paid for.
This is for the Series 65. Like, dude, what is this, high school? I'm going to skip ahead.
Is the income statement.
US dollar edges lower. Scotiabank.
So other expenses that aren't
Skip.
create,
Skip.
it will take some practice to feel comfortable. For example, where would you find a company's dividends paid to preferred stockholders? On their balance sheet or their income statement? Income statement. Where would you find their depreciation expense, depletion expense, and amortization expense? Where would you find these as expenses, which mean negative numbers? Income statement. Who gets paid a dividend first? Preferred or common? Preferred. Common gets paid last. And then at the end, after all of the expenses, the dividends are paid. If there's money remaining,
Skip.
that's the owner's equity. Or if we're looking at this for a client, it would equal their net worth. So if your client's
Skip.
current.
Skip. Skip. I'm just going to take the practice exam. I'm not even going to read it. I'm not even going to pay attention. Time is it? Yeah, good enough. Oops. Are we there yet? What time is it? No, it's still too early, huh? Oh my goodness. How you doing? So today is all about CPI and earnings. JP Morgan seemed to do all right. Goldman Sachs seemed to do all right. So I'm just making sure you're keeping an eye on that. Looks like my layout got messed up a little bit.
Canadian dollar lags commodity peers, Scotiabank.
US dollar, yen, BOJ Governor Ueda comments boost BOJ tightening bets. Scotiabank. Forex Live European FX News Wrap, UK inflation eases, markets eye US CPI report.
All right, well, I guess we'll just get going, right? Boom. It just turned to 8 o'clock. So let's do a news update and then we'll get going. Hey, trader, have you heard the news?
US CPI inflation set to accelerate in December as progress toward Fed 2% target stalls. Canadian dollar lags commodity peers, Scotiabank.
US dollar, yen, BOJ Governor Ueda comments boost BOJ tightening bets. Scotiabank. Forex Live European FX News Wrap, UK inflation eases, markets eye US CPI report.
US dollar edges lower, Scotiabank.
US dollar at crossroad for either substantial break lower or fresh highs on the back of CPI relays.
OPEC sees 2026 world oil demand keeping pace with their forecast for this year.
Gold clings onto gains ahead of CPI release, while yields trade sideways.
Euro US dollar clings to gains with US inflation on the horizon.
Yen firms on BOJ talk. Sterling calmer on CPI, but US data still to come.
So, hello, how are ya? How's your mum? Yeah, welcome to Forex.Today, the YouTube community of thousands and 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 thousands of foreign exchange traders just like you. And we gather here today because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Guten Morgen, ja. So, Komatalivu, how are you? Looks like we're missing a logo up here on the stream, but I don't see why it's not seen. I don't know why it's not there. Well, anyways. I think there should be a little one here, I think. Maybe it's just, here it is. I think if I bring it forward. There it is. There's the little thing. All right, anyways. Good to see you. Now, what we want to do today is cover technical and fundamental analysis with our overriding goal of planning our trades. And once your trades are planned, then you need to execute your trades. And so you need an execution partner. And you need an ECN. That's it. You need an ECN. There are many like it, but this one is mine. Actually, there's not a lot of ECNs. There's not, actually. Most foreign exchange brokers are not ECNs. They're dark pools. And they never execute your trades because they're trading against you. That rubs me the wrong way. I don't know. That's just me personally. I like to have service providers. I don't want somebody betting on my failure so that they have a success. That just is weird to me. Right? It's weird, isn't it? So anyway, I need a good service provider. I need someone to actually execute my trades into the interbanking system. And that's what Traders Way does. And so, great. And I've been working with them for 10 years. So good. They're wonderful. So I like it. I like it a lot. So do your own due diligence. But start with tradersway.com for your execution partner. Okay. Let's see. I got a lot of tabs open today. So we're going to go. Okay, we're going to go. Should I use that one or that one? No, I'll get rid of this one. Let me just close some of these pages. Maybe they slow things down. Well, I have this. We still haven't integrated it. But this is a new feature. So I showed you earlier today we have artificial intelligence that gathers and then reads headline news to you. It's called a news squawk. Most services charge $200, $300, $400 a month. TRADARS is free. Hey, it's a good deal, right? But that's just headlines. Somebody said, hey, well, can you actually just have the AI read the report and tell me all about it? Well, we go one step further. So we go to, right? Let me click this. It's a little slow because it's a lot of data. Let it load. Let it load. Be patient, Grasshopper. All right, I'm losing patience too. Patience! Hurry up! Patience, Grasshopper, patience. Anyways, something's happening, I think. So it's going to go, there we go. It goes to actually dozens, at least a dozen. Let's say at least a dozen websites. And it recognizes if the articles are about pound yen or about something else. Then it reads the article. See, the headline news one just reads out loud what the headline is, but it doesn't know what it's about. So this AI reads the article, interprets what the article is about. Is this favorable for buying or pound yen or not favorable? So it has to make a determination of what the article is about and what it means. So it has to interpret now. So it's true analysis. And then it aggregates like how many articles did it read? How many websites did it get this information from over the last 7 days? Then it puts everything in an aggregate now and says, by and large, was this positive for buying pound yen or not? So now it's an aggregate score over the last 7 days. And you can see articles right now being written on multiple websites are actually quite negative. They're very negative. So this is market sentiment. It's reading the news articles so that you don't have to read the news articles. And you don't have to then in your brain say, well, you know what? This is the 8th time I read an article this week that is negative on pound yen. But more importantly, we can go back 90 days and see the change in sentiment of the market. This is the market sentiment now. Isn't this sweet? And hey, not long ago it was quite positive and things got nasty recently. So this is the 7-day score, but this goes back 90 days, 60 days, 30 days, and then this week. Isn't that cool? And so you may have been able to see since the middle of December, sentiment changing in the market for pound yen to the downside. Dude, right? Am I right? Like, dude, that's amazing. So not only do we gather the news and read it to you so that you don't have to take your eyes away from the chart, you can just listen to news flow as it comes in. You'll hear it while you're trading. You don't have to watch the page. You just have it running in the background and you trade and you're always updated throughout the day. Every time something comes in, boom, it tells you. But now you can have our AI actually gather the sources, okay, and then aggregate them and then give you a total score. So looking at Action Forex, FX Street, FX Empire, Forex Live, Investing, Cube, Invez, Orbex, and others, 8 different websites, mentioned USD yen this week 36 times, but the mentions are below average, probably because of the holidays. But generally speaking, they're favorable for pound yen. Has this changed over the last 90 days? Okay, and then you can switch and check it out. Isn't that amazing? So now you have automation of gathering all the news reports. You now read hundreds of news articles every week. And then you remember them all over time. How does that make you feel inside? Is anybody giddy? What do you think? Are we making the right kinds of investments for you? Pretty cool stuff, right? My goodness. Speaking about reading the articles and interpreting, I'm running something called the Week on the Street today because I was at a Fed meeting yesterday and I couldn't do the regular Tuesday meeting. So we're going to do that tonight. If you want to attend, we will download economic reports, read them, and interpret them, and actually use a human brain, not use AI. Okay? Yeah. Okay? Yeah. Interesting, right? Or you could just go back to doing what you used to do as an amateur trader. You're probably not even reading the reports. Or you're not doing research on 8 or 9 or 10 or 12 or 15 or 20 different websites. You just open up a chart and fire off some trades and pray to God that you make 20 pips. Well, if that works for you, keep doing that. If you want to be smart money, join the club, traders.com. I'll just do a quick overview because I've already done this for the entire community. Well, those that subscribe to the fundamental team. We've already done all this, so I'm not going to go over the whole thing. But here we are, 10-year T-note, 4.79. Oil, just below 78. Gold, just above 2,700. S&P 500, okay, it's going to open in 75 minutes. Right now we have pretty decent Goldman Sachs news, pretty decent JP Morgan news. So maybe that gets a bit in particular in the financials. Dollar, hey, not at 110, but instead at 109. So we've had a couple of days of dollar weakness rolling towards risk on. I'm not sure if I'm totally in on that. That's right, 830. Yeah. And Bitcoin back over 97. So for those that are on the TRADARS fundamental analytics team, we've already talked about, we've compared CPI to PPI and PCE, and we've talked about the subcomponents of CPI that we care about. The headline is important for sure, but only if it's dramatically higher or dramatically lower, which, unpredictable wouldn't be the thing you would predict. So it'd probably come out, I would guess, a lean on the high side, not the low side, but not dramatically so. So probably ends up not changing anything. But can anybody tell me two subcomponents that we need to think about when we read the CPI that we should consider? $15 minutes and 9 seconds. Housing and wages, Maida nailed it. 3 points, nothing but net. Food and energy, no, nobody cares, Richard. That's core. The Fed doesn't use core CPI, therefore they don't care. They don't use CPI, so they're looking at other things that could lean towards what's important to PCE. So we call it, are you ready for this, Richard? Super core. Okay? It's super core that we keep. So, for example, why do we have core? Well, generally speaking, the Fed doesn't control oil prices. Now, Richard says they can't do anything for rents. Yes, they can. They cannot cut interest rates. Yeah. Actually, that is a thing, Brian. About a year ago, the Fed said they were interested in what they deemed super core. So you take out food, you take out energy, you take out rent equivalent, and you account, you basically remove an increase in wages to get some other measure of inflation. Yeah, and they called it supercore. I think they only referenced it once or twice, but it's a thing. Yeah, it's a thing. Which tells you what? It tells you, well, if the Fed doesn't care about CPI, which they don't, what would they use CPI for? And anything to say, well, they care about, and again, I've already covered all this in the fundamental analysis that we already did this morning. But they do want to see if wages come down, because that reduces spending and that reduces inflation. But also housing is important for increases or decreases in spending, and which directly impacts things like GDP. And so they that's what they care about. They're like, so we don't really care about CPI. We have PCE. But if they care about wages and housing, they're going to just say, well, let's skip the headline and all that crap, and let's just look at that and see what we can learn. Is there inflation, and where is it? And in particular, things that indicate wage growth or contraction, or the real estate market is stifled or making a comeback. And so our prices falling, our rents falling, our wages rising, or rents normalizing, wages normalizing. So a wage growth of 2% or less would be normal. And right now it could be as high as 4.5, 5, depending on which country you're talking about, right? And so that's just extraordinarily too high. Now, people that don't understand economics, they're like, well, why is that bad? More people making more money, isn't that good? No, that's not good. Money is bad. Do you understand that? You have to come to grips and terms with that. Okay? Money is bad. So more money is more bad. And no, it's not more money, more problem stuff. No. Why do you need more money? Because everything's more expensive. Well, then that's bad. What if you had access to everything you wanted and needed? Okay, well then, and prices for everything you wanted and needed were reasonable. They were not overly expensive. I'm trying to fix our backgrounds and stuff. I don't know if things are off a little bit today. No, that's it. I don't know if you can see me farting around. No, that's not it. You're like, what is he doing? Yeah, I'm playing with my nunchucks. I guess that is the right thing. Anywho, I can't find the background. I'm trying to change the background. It's off. Something's off. The live stream software. Yeah, anyways, I'll quit messing with it. All right. Yeah. Well, in capitalism, Richard, scarcity is rarely a problem. Yeah. Yeah, wages went down recently, yes. And also there are signs of cooling in the real estate market. And that's why, you look at 30-year mortgages, right, which I already did this morning. And, so that's one way of measuring market forces. If the 30-year mortgage is coming down, people are more likely to buy and sell houses. And if they're buying existing homes, then they need to fix them up. If they're going to fix them up, they're going to go to Home Depot and buy things there, maybe have them delivered, and they're going to hire contractors. And, all of a sudden GDP is awesome. Everything is awesome. But nobody wants a 7% mortgage. Okay. So we want to see owner equivalent rent come down. But you can also, instead of doing that, you can just say, well, I wonder what's happening in the 30-year mortgage market. Just like the Fed funds rate. We use the Fed watch tool. You could just watch the 30-year mortgage and say, oh, that's the aggregate of tens of thousands, if not hundreds of thousands of mortgages, and it shows you the future expectations for inflation. Okay, since, let's go in here. Okay, since this period, October of last year, expectations for inflation in this market, this liquid market, the future expectations for inflation and rise in interest rates have gone up, not down. You see? Now you're like, well, I'm not an expert in all this. I don't know how to look at all these economic data points and interpret that in monetary policy. Wayne, I don't get all this. It's really complicated. Well, pick one source. This is one source. Mortgages going up, inflation's going up, interest rates are going up. Mortgage rates coming down, inflation's coming down, interest rates are coming down. This is your way to look at a trend of a very liquid market. Now, we also look at the negotiations of the Fed Fund Futures market, which is not controlled by the Fed. The Fed controls the discount rate. The Fed funds rate is lower than the discount rate, and that is negotiated by smart money, bank to bank. So cool, right? You can say, well, I can just watch this at the Federal Reserve Economic Data database. Okay, yeah, you could. Okay, cool, right? So this is some of the work that I'm doing over at the Fed, the St. Louis Fed. Okay. So here's our CPI. And, spaghetti-o. Okay. Spaghetti-o. September, October, November, December. And that prevents the Fed from cutting. And we saw responses to this in the summary of economic projections, didn't we? Yeah, we saw the dot plot change after this. See, I reset it here and let's go back to this current period. During this period of declining from 4 to 3 to 2 something, the Fed was talking about cutting interest rates quite a bit. They were quite confident that inflation was under control and that they could normalize the Fed funds rate and go to R star. Okay? But now R star's moving because of this period, and all of a sudden everything changed. Everything changed. The tone of the Fed changed and the dot plot changed. And now there's like, spaghettios. Maybe even no interest rate cuts this year. Well, the summary of economic projections, which came out October, so it's not moving with me. Let's see. I thought it would grab it. Somewhere in here, okay, the summary of economic projections changed. They took out 2 rate hikes. That, in a way, that's the same as adding. That means the future interest rate is 50% or 50 basis points higher. It's a rate increase. And now we've taken another one out. That's another rate increase. So if CPI, in particular the supercore stuff, is higher, wages are higher, owner equivalent rent is higher, we're probably going to take out that last rate hike this year. That's the same as the Fed raising interest rates. The R star moves. Spaghetti-o. But most likely, nothing happens today. No big deal. So look for that. So we can go to our scalping tool. Okay. We have
1 minute, 50 something seconds less. Let's lean on, there's a scalp, maybe. There's lots of scalps, but not a lot of follow-throughs. Okay, here's our plan. The other thing you can do is come to the calendar or listen to it in the background. So let's do it in the background. Where are we here? Yeah, we're here. So what is this? Yeah, we don't need that. Cool. So if actual is less than, 66% chance of up. If actual is greater than, 100% chance of down, meaning in the past, that's what it's done. If it comes out as expected, 80% chance the 2-hour trend will be down based on past performance. Now, it doesn't predict future results, but we have the stats. Eight, 7, 6, 5, 4, 3, 2, 1. Year over year, we're waiting for it. Is it 3.2? Thank you. 3.2. Beautiful. Okay, that's what it looks like. Isn't it nice to have all this? I hope you're using all these resources. So a little higher than expected. That happened in October. It went up and then closed a little bit lower 2 hours later. In April, it went down and closed lower 2 hours later. In February, it went down and closed lower 2 hours later. In January, it went down a little choppy, but then closed lower 2 hours later. Now, this past performance isn't indicative of future results in the sense that, well, higher inflation, right? How is this going to impact the Fed? Well, we haven't looked at the subcomponents yet, but, in a way, it makes it more difficult for the Fed to cut interest rates if we have 3.2% CPI where they wanted more like 2.5. We have 3.2. So it makes it difficult for them to cut interest rates. And what does that typically do? That would probably increase the value of the US dollar. Okay, so let's go to our Trader's Way charts. Okay. So, like, for example, I'm very interested in selling this around kind of where we are now. So I could go into that looking at it from a bearish point of view. Right now, dollar is weak, which, what I think is happening is I think the market, unless there's going to be a big turn of events, I think CPI, the way that it's reacting on the first response to the news, is that it could be worse, right? And we're really more interested in what's going on, like with the banks is another way of saying it. How's the general economy doing? Inflation's not high enough to kill anything, right? If it was 0.7 or something, but so, it doesn't change anything. It could have been worse, right? Yeah, energy prices added to it, but I think it's going to be significantly more in the future. What I'm looking at here is I already have trade plans of selling these assets. I have to really zoom in now so we can see it. So are you're going to abandon? I don't know about that, huh? Okay. You really want to corner the market on New Zealand dollar? Really? Really? That's what you want to do? Now, we threw this plan A out. Okay, this has failed. Remember, that was kicking it off the 5 EMA. Plan B, if you recall, was kicking it off the 21. Okay? How many people know that I quote unquote predicted this week would be a false rally? How many people would say that that's generally what you anticipate that I say every year? The third week false rally. Okay. So right now, if I analyze this euro dollar daily chart, it's still bearish. So I wait my turn. That's all. I wait my turn. Really, you think CPI made the market bullish now? That's what you think? That CPI report was so amazing that everything is right as rain now? Or is somebody just going to sell it on the 618 daily 21? You see? Now, the one thing that would do it, at least for now, is I think the stock market, which is going to open later today, that the banking news is good. Or you can interpret it as buying the NASDAQ on the 21 EMA. Weekly. But I've been teaching weekly for a while now to make sure that the shorter term time frame traders don't get lost in the minutia or in the noise. So we talked about this, I think, on the swing trading group, wasn't it? On Thursday? And we've come down and, oh, interesting. Now, one of the things that we talked about is there's two things you're going to likely see, or at least be prepared for, up to the 8 and down. Yeah. Yeah, we specifically said that, I don't know, what was that, 4 days ago, 5 days ago? I think Pegler had that on his analysis. And the second one would look like this as a giant maybe. Now, if the market was going to have, let's say, a down quarter, okay, down to March. If you think it's going to be down to March, it's going to be one of those two things. But if you're a bull and you're like, Trump's going to fix everything, then, dude, this is what we talked about last week. Look, it's all lined up. You should have known a week ago. Yeah, cool, right? Hey, thank you for clicking the thumbs up button. Okay? Yeah, thank you for being here this morning. Thank you for all you do. It's a tough gig, a lot of information, isn't it? But again, I invite you to consider joining traders.com so that you don't trade like an amateur anymore. You just got to turn that part of your life off. That's over now. There's no reason you should continue trading like an amateur trader. You have access to the data. You have access to the coaching, right? We do like 5 hours a day in performance coaching. It's crazy. We have all the technicals. We have fundamentals. We have AI gathering the news, reading the news, quantifying the news. So now you have market sentiment, right? It's incredible. So it's like saying that you want to be a small institutional trader and you would like to have an entire staff working for you. You have a fundamental analyst, a technical analyst, you have a performance coaching, which is like, if you watch Billions, who was the performance coach? What was her name? I forget. But you have a technical analyst, a fundamental analyst, or a quantitative analyst. You have performance coaching, and you're essentially, if not, Wendy, thank you. So you got Wendy, you got your team of analysts, your quant team. So you got, see, I haven't watched it in so long. Who was the quant trader? I've forgotten their name. It's right there. The one that split off. Taylor, thank you. So now you got Wendy, you got Taylor, you got your analyst, you got Dollar Bill as your technical analyst. Yeah. And I guess I'll be Axel. I'll work on your team as well. I'll be your economist and trader. Yeah. No, I'd be Axe, but I think Jessica would be Wags, I suppose. But anyways, but look, just imagine like that's available to you now. So you got an entire trading team. Think of it this way. If you hired a staff of quants, a staff of technical analysts, a staff of performance coaches, and experienced traders to guide you in your decision-making process, would it cost you more than $300 a month? I am not uncertain, David. Yeah. By the way, thank you for the recommendation, David, on the show. I watched the first one. I'm like, oh, it's the guy from Narcos. I'm so happy. It's so great. And then at the end of the first episode, I'm like crying. He's dead. He's dead. Yeah. Anyways, that was a great setup. Like, dude, to build all that up, build that relationship up on the very first episode, and now you got buy-in. You're like, oh, these guys are good. Oh, it feels so good. They're gonna take care of Cooper, and then you're like, don't. They're dead. Yeah. So anyways, yeah. What a great open. So anyways, yeah, seriously, guys, think of it. Is $300 too much to have an entire trading infrastructure and team for your small institutional trading and investing business? Dude, $300 is stupid. It's so cheap. So consider it. Put your girl panties on and join. Let's go. All right. So anyways, there you go. So we got some up today. And we'll see how long that's going to last. Just bear in mind where that that daily ADMA is, huh? Because again, 3, 4, 5 days ago, we talked about that as being the likely top for plan A down. And there's a plan B down, which would be a double top. Yeah, it's Landman. It's about the oil industry. So anyways. The other one we were talking about is billions. Cool. So if you thought there was some vulnerability later today, okay, you look at implied volatility. And so oops, didn't mean to click that. I meant to click this. So you can go to your IV, your implied volatility analysis, and you're like, hey quant, okay, your QB, you remember QB? What's your QB? Quant box? No, quant bitch. Hey, tell me if I was going to sell this today, at what price would I sell it? How about 58.96? It's not using technical analysis at all. Now, that just shows you based on implied volatility now, but is there another way to do implied volatility on the S&P 500? Let me show you. Let me do this for you. Okay, let me do this. Let's drop into a smallie. And you could do something like, let's change this whole template. Pivot point. Let's do, where did it go? Am I missing it? Where's my bias pivots? Template. I guess it's an indicator that I wanted. All right, so then let's do it this way. I want to do swing bearish. Swing trading bearish. Okay. So there's a price there. Based on what happened last week, this is an area of concern for this week. What does that mean? Well, based on last week's volatility. Yeah. What if we looked at monthly? Okay. There you go. We're caught between weekly and monthly implied volatility. Based on what happened in December, this is a price in which bears would consider as a vol top. And with that being said, I love you, babe. That was real, but I gotta jump. Thank you for being part of the TRADARS community. Thank you for being part of the Forex.Today community. Make sure you subscribe, like, and comment. Let me know what I did right. And if I sucked, let me know. Click the thumbs up button. And I will see you later. So peace on earth. May the pips be with you.